What's up, fellas? Ladies and gentlemen, good morning. A few minutes till the open. So far today, what I'm leaning towards is lows. Above. I'm actually interested to see if we don't want to give one more rally higher here. Potentially getting that 830 level. That's kind of what I would look for. This buy side here. A little hesitant just because we do have, right, 1, 2, 3, 4, 5 now swing lows that haven't been breached. So say we do want to here at 930 run stops. It would make sense to actually start running these first and then see if we couldn't get a reversal to run higher. Right, we're still inside of, so this is the 4-hour fair value gap from yesterday even. Right, you see we got up through it once, up through it twice. I'm seeing how, right, since we've hit the high of it and we've actually closed above. If we're not going to start closing below, that's kind of why I'm leaning towards higher prices still. Right, if we can get underneath this 4-hour, like say we attack this low and we actually close underneath that low, close underneath and outside of the 4-hour fair value gap again, then I may actually have to rethink the idea and we may start heading lower. Which if that's the case, just going to pull this up here. Let's see what we get so far this morning. All right, so there's the run lower to clear out these stops. Now I'm watching to see, right, if we're going to overtake this huge down close candle. Off the midnight. So notice how close, right? This is the midnight level. This is the 830 level here. So really close proximity to one another this morning. And that's actually what we're hitting off now, right? So I'm interested to see, like I mentioned, if we're going to push back up and through this fair value gap here or not. Because if we close above this, right, we should get back above midnight. I should get into 830 and should start hitting those highs that we were talking about here. So far though, body respecting it bearishly. 2 minute, 1 minute. All right, candle body. Let's see, dollar. I think we might actually start accelerating. Let's see, low. Let me just show you quick right what I'm looking at here. NQ, right? NQ heavy as hell, aggressively. Dollar reaching for a high, which right we should expect ES. If that's the case, ES more than likely will actually reach back for this low here. But as always, right, with the especially if the indices aren't really aligned, right, for the opening, that first half hour. Kind of have to sit on your hands. Like if these were all moving in tandem, right, it'd be a lot easier. But the fact that NQ, huge sell-off, right, dollar rallying, ES not moving yet, just means that I would prefer it to go lower, but we could have a mixed opening here, which would see ES kind of be held in this range. You're actually right there, Brisket. If I'm being honest, I don't think. Huh. Not gonna lie, I swear that wasn't there when I looked. 'Cause I mean, we ran through it together. That's very interesting there. They played us. They hit us with a little quick. So we do get back above, right? So far this Judas swing is playing out as we expected. Just to show you here in the other two, dollar fell short. I would have really liked for dollar to run this high. Run that liquidity. But we'll have to see. Let's see. Back inside. Okay. So I was interested here on this fair value gap, and as you see, respecting it pretty well so far. But we're remaining above this midnight level. So as I said, if we can get above midnight, we should get to 8:30, and then, right, this is kind of that first target, these relative equal highs here, 1, 2, 3, 4, 5 relative equal highs. However, bearish volume imbalance, we don't like that. So far on the 5, really another morning like yesterday, right? A lot of wicks. Haven't really gone anywhere yet. Still prefer higher prices though for me, right? Because we're above the inversion, we're above the bullish, we're respecting it. We're getting above midnight, respecting it, right? Should be getting above now, 8:30. As we said, overall buy side is here. As we mentioned, obviously first buy side pulls here, right? Equal highs. And these highs are actually perfectly a 5-minute fair value gap. So I'll show you that. We have, if I go to a 5-minute here, you'll see how this, right, 1, 2, 3 highs, perfectly aligned with just a small inefficiency, but an inefficiency nonetheless, right? And that's really all that I care about. I like when we have these fair value gaps paired with liquidity levels like this. However, on this 5-minute now, I would really want to see this candle close above the 8:30. We got above the midnight pretty easily, but for the morning session, I would also like us to get above that 8:30. Fair value gap here. So you see now we're holding that 830 level. Not ideal. It's a 5 minute up to. Right, so the 5 minute wasn't able to. But here we're getting a pretty good expansion, which is nice. I'm gonna remove this 4 hour, just understand, right, we're inside of that. I do want to kind of show the right equilibrium. We're hitting that perfectly here. That's why we're getting this hesitation. All right, so if we can get above that, that's kind of why I would continue to favor higher prices. Well, what that? Here, let me show you. Oh, wrong chart, wrong chart. There it is. Yeah, that shit disappeared. Did I just delete it? Bruh. What? Hold up. Oh, okay. I was like, what the hell? April 5th, I want to say it was. Or what did I say yesterday? Yep, April 5th. Here. Way back, yep. All right, so we got one here, as we said, using really this here, this order block, 930 Judas swing. Final target's here. We should hit that. We're accelerating pretty nicely. At this point, I'll go ahead and smooth stop, just above break even. Let's go ahead and actually close. So we got one just partial out right at this buy side, 4 handles. Final TP will be 5. Matches up with buy side, which is nice. Beautiful. Go ahead and get me out. What in the... Oh my, see? I'd be fucking up with the goofy ass. I forget the actual trade evade counts are different. But there we go, not bad. So we got in here on this down close candle. As I said, I was watching this fair value gap, right? I was interested to see what happened with these inversions in this. So once I saw this candle wick, completely reject both and hold that midnight level. When we then traded above its high here on this candle, simply was just entering on this candle's open, excuse me. Like that, right? Using this candle's consequent encroachment as my stop. Because I'm saying we shouldn't really revisit below the midnight open, right? This was all the work we had to do underneath it. So I'm comfortable with the stop being just really at that consequent encroachment like that. And as we saw, right, final target was just the 5 handles into our buy side objective. So not bad there. Yep, midnight was clean. Here's an NQ. I only look at NQ, brother. I use it for confluence. But as we said already this morning, right, I can go ahead and show you again. I'm not using it because we're not moving in tandem with one another. Right, because as we said, NQ was selling off aggressively, dollar was rising, and NQ or ES was not doing anything. Right, so when we have mixed openings, I'm not relying on these other indices to really help me with much. And I mean, yeah, this is gross. I guess you did get a fair value gap set up to go short, but obviously, right, this was a very obvious run higher, and that's why, yeah, I stick with that. So I'm thinking we may actually want to revisit the high here of this 4-hour fair value gap. Because, right, we close above, we try to get back underneath, but then notice, right, we immediately push back up and above. So that to me is telling if we're going to be pushing above old buy side pools like this, especially say we leave this fair value gap here. If this fair value gap remains open like this, paired with down close candle, paired with buy side already above consequent encroachment of the 4-hour, I definitely would look for the high of that 4-hour fair value gap to be hit. Institutional order flow drill here potentially. Right, just barely wicking into it. So we close in the volume or the fair value gap. So that kind of negates that whole idea. So fair value gap PD array out of the question. Still could use the old high, however, right? So not giving up on that idea yet. Right, as long as we're holding above this level. We've now made equal highs with the volume imbalance. So yeah, I would look just for that run higher. Triple stack highs. Only one contract. Yep. Oh, I see what you mean, Matt. I was like, what? That's all right. That's what I'm saying. You start with one contract, you'll grow into 4, 5, 6, 7. So we've just hit the close, so let's watch what happens here with this volume imbalance. Right, we would prefer that it remain open, so we could use it as support. So that's nice. So no, yeah, would expect this to hold support. Right, wouldn't want to see candle bodies start closing underneath it. As we often say, we can wick, not scared of wicks. Could even wick into this again. But these are the two levels I'd really want to see hold. I mean, I wouldn't say it's like a hard ICT rule, Mr. Mike. That's just something that I've learned and have adapted over the years. Because right in my mind and just the things that I've seen play out, I mean, it's kind of showing here, right? If we're going to open and the indices aren't going to be moving in tandem, then there's really no use in trying to use them for confluence because they're not linked. Like, let's see what NQ's up to. Still, right, NQ, I mean, not doing anything. So if you're here trying to trade this, right, that's frustrating. Whereas ES easily is kind of respecting our discounts, reaching for its target. What's dollar up to? Okay, that's sketchy. So dollar's just ran its high. Which actually, that might benefit ES even more. Like if this is just a run on stops and we reverse now again, the fact that ES hasn't dropped on this huge run up here may indicate that ES actually wants to remain pretty strong and bullish. Let's see, NQ. Yeah, I'm done looking at NQ. Could care less about NQ right now. Screen time. Yup, that's fair. I assume you mean, yeah, just time spent in front of the charts. Yeah, I'll show you. Let me go ahead and move the screen. And I actually took a quick little L beforehand. Stupid entry. So it'd be good to share with you guys as well. You should be seeing. Oh, nope. Sorry. I gotta change the Discord view. Maybe. Hello. Oh shit. Yo, what should be my accent? Damn, now you got me thinking. But I'm definitely not from the South. I'm from like shit, what would I say? More southwest. Arizona, New Mexico, Colorado types. Born in New Mexico. Lived there for a bit. That's comedy though. Oh, yep, I do say y'all hella actually. That's hilarious. This makes more sense, you know? It's faster than you all. It's 2 syllables. Oh, okay, but yeah, I wanted to recover that long quickly. A. So you should be seeing the actual trade rate account here. Right, this was goofy. I was seeing if this volume imbalance would hold here. Stop under here. As soon as we closed underneath the volume imbalance on this candle, right? So I already offloaded a lot of the position on these two. Had 3 contracts, closed 2, and then the final one just stopped me out. Even kind of less in profit. My first stop was here. Then I move it here. So even this, as I often say, my losers are never full losses, which is nice. But then once we push back up above this candle, right? So what is this really? Well, low, high, lower, low, broken. So we have a breaker block here. Right, this is a breaker, like this. We also have the 830, as I was saying. We also have an inversion here. And now we also have the 1 minute bullish, okay? So all of these discounts here, which is why I was trusting higher prices. And you see my first entry actually came as soon as this candle closed, right? Because I was watching this fair value gap. I'm actually gonna move this one. Oh wait, I don't know if the Zoom people can see. Hold up, sorry Zoom. I forget that I gotta change both. Jeez, bad, okay. Back to it though. So right, as I watch this fair value gap, my interest lies here. Because if we're gonna hold this, right, the fact that we push above midnight, push above this candle with this candle. If we're gonna remain bullish, this fair value gap here should hold us. So once I see us wick into this, right, keep the breaker, respect the midnight. As I said, as soon as this candle closed, I bought, right, so there. As soon as we close. And then like I said, right, I'm still trusting this breaker. I like how we created that down close candle. So when we form the next swing low here, right, I'm just buying on the down close candle. Partial one obviously came like here, and then hold up. Who's talking? Mute. There we go. But yeah, partial one, right? Looks like, I guess, the same entry, but we partialed one contract out a little before buy side. And final target was just that buy side objective there. So I hope that kind of helps you a little bit. Right, and this is my Top Step account actually, so this was kind of this was like a practice one. I wasn't sure how it would work, which is why I had a super tight stop on it. But look at that, right? So the fair value gap. We don't hold this one. But as we often say, we can, because we've hit buy side already here, well, now we can give a retracement into a discount before a reversal. No, come on, brother. Give me that. I mean, look how we use that inversion level with the old high. This is beautiful there. Never tired of that precision. Perfect delivery. Oh my gosh, a sec. No. Come back. He said I could see him. Hey, mind your business, man. How about that? No, I had a limit, but it didn't hit me on this inversion here. So I'm just trying to figure out if I want to leave it. Because I wanted to get in as soon as this candle here closed above the inversion and above the old high. I like that. But I'm just not sure. Value gap. XY. Yeah, I'll leave it. So I still have my limit there. I don't know if I'll get tapped in though. 5 would be like that. So I have this set. Oh, hell yeah, Kraken. That's the way to do it. If you have a goal for yourself, build that discipline. Reach your goal and call it a day. I don't think I'm gonna get in on this one though, to be honest. I'm saying how we're using these discounts, right? Body's holding, volume imbalance holding. And I could use this entry, right? I see this forming, but for me, I'm not a fan of this. Just because, right, my target is, I mean, I could always extend it. You little bitch. But right, my target just wasn't, the actual target wasn't enough for me. 3 handles from the volume imbalance. And you see that plays out perfectly. And right, that's a good, I guess, thing to show of, even though I understand it's gonna happen. Right, I'm okay missing that. I understand I'm probably gonna miss it. And that's fine with me because it doesn't fit the, just the parameters I had set. Right, I wanted at least 5 handles. But I mean, that's obvious there, right? Right. Damn price. Got me pissed real quick, quacking. I was like, come on. And I'm more upset because, I wouldn't even say I'm upset. But this was just human error, too slow on setting the actual limit. So I'd set the limit here, but it was already when price tapped it and moved away. So I was hoping that this candle would give me another opportunity. But as you see, we were in a pretty big rush. We're gonna keep running, honestly, I think. Yeah, we are bullish. So I was hoping if this 4-handle candle had closed above the fair value gap, I'd still be super bullish. At this point, still kind of am bullish, but that would have been a very significant kind of indication. You see it closes right on its high. So even that is enough for me to kind of trust in higher prices because, right, we've held the bullish fair value gap here. So I think we'll keep running, to be honest. And right, I was looking for higher prices already just because of the fact that we keep hitting the high of this fair value gap. So the same thing we talked about yesterday on a lower time frame, okay? Where you can kind of see how the fair value gaps are being used and that can give you an indication. So I see that we keep smashing into this 4-hour fair value gap, right? Once, twice, sure, we give a retracement, but now a third time that we're trying to get through it. And this for me, right, the fact that we could not get back underneath the 4-hour fair value gap here was pretty significant for me to understand that higher prices should be coming. Because really the way we think about fair value gaps, if we're going to trade to the high of this and we're going to remain bearish, right, we should get back underneath and close below. But the fact that we instead close above it, refuse to leave the low of it, right, while clearing sell side, like we said, this was just that morning Judas swing. And now we get that expansion that we're looking for. As we've been saying the past few weeks, right, we're not trying to call tops. All in here, right, all in here, all on the way up. We're not trying to call tops, right? We're not trying to call reversals. Any retracement has simply been to gather stops and continue higher, right? So now that we understand that, this whole retracement to pick up these stops and now return higher. Unless, okay. NQ, oh, you're selling NQ? What's NQ up to? Eee, I told you, brother. I said, I ain't looking at NQ the rest of the day. Fuck that. Four, 5, 6, 7. Oh, are you in still, crack? Or are you just saying that's what you look for? I have a limit set here. Damn, I'm out here just giving y'all signals nowadays. What's going on? Y'all lucky. But once again, I don't know if I'll even get tapped in. Because really, we might not even get into, right? So this is consequent encroachment entry of the fair value gap. I don't even know if we'll get there though, right? Because this, we've broken above the 4 hour with the volume imbalance. So we may actually just dip into this. But for me, right, I look at that same thing. Like if I'm going to aim for that buy side, that gives me 5 handles. But for me to feel comfortable with this here, my stop would have to go underneath really this swing low, this candle. Hold up. We might just run from here. If this remains open, that's really what I'm waiting for. If this fair value or this volume imbalance remains aligned with this order block here perfectly. Miss you too. Yeah, that's fine too. Brisket there. As I said, I don't even know if we'll get there now with what we're forming here. We can still get into that. I'll still, for me, honestly, leave it where it is. Just because it'll give me the best risk to reward for me. That'd be kind of a deeper retracement, but bullish volume imbalance after holding. Here we are bullish. Yeah, me either. Not even I do that, really. Sometimes on my Forex Funds account I will. Just because their drawdown rules are a little less crazy. And I have a decent buffer. But no, as of late, yeah, everything really for me has been 0.5% to 1%. That's kind of what I like to work with. Keeps me comfortable there. Allows me to kind of mess up a few times. Because let's say I do 0.5%, my max stop out for the day. If I lose 2% on the day, I'm done regardless. If I'm risking 1%, 2%, 0.5%. So we're doing 0.5%. It just gives me the opportunity to be offsides a few times, which I don't like to do, but as we say, can't be right always. So you got to build that into your game plan. On my options account, I will risk way more than 1% though. But that's a whole different kind of risk management scheme. Yeah, I don't know. NQ is hideous this morning. Nice. So this is nice, right? What we wanted to see. We run that high. We're starting to retrace, which, as we spoke about, that should continue to lift ES. I mean, as we say, bodies telling stories, okay? What should we expect from this, honestly? Purely off reading price, right? Going off what price is doing, it looks like it doesn't want to get underneath that volume imbalance here. This down close candle, really. So I'll continue to monitor this and see what plays out. How much did you risk on a prop? So that's kind of, when I did mine, I was doing 2%. But that's because we had like the time limit, right? Now I need to get it quicker. If you're doing something like Apex, I mean, shit, I wouldn't even, like I said, I'd probably stick with 0.5%, if that. Yeah, this would be a hard one to be really comfortable entering with. It's just because, right, this is still kind of jumping out to me here. The old 4 hour with the volume imbalance, with the 1 minute fair value gap paired with it. But as we said, look at that even. So it's almost like we want to get down there, but price is really holding this level. Once again, right? The wicks are getting low. Body's refusing to get underneath that. Interesting. We actually created a 2 minute volume imbalance here. So if this candle can get above, we may actually start getting that release we're looking for. If not though, right, the fact that if we get underneath and close underneath this, then maybe we can get that run into here. But I'm like, shit, if we're gonna close above the 2 minute now, right, so we'll have the 2 minute and now the 1 minute underneath. Let's give it, let's see, 2, 1. So once again, right on the 1 minute. Jeez. How many times? 1, 2, 3, 4, 5. And this to me kind of might be that time distortion we're having to deal with. Like say the 15-minute chart leaves this fair value gap, right? We're gonna have to wait for this candle to close. 20 seconds. So we may actually close, leave the 15-minute, and then we could return into it. 5, 2. Because right, it's there on the 2, it's there on the 5, it's there on the 1. 15, same thing. Hourly, same thing. And that's kind of what I mean when I say, right, like higher probability fair value gaps. When fair value gaps like this are being overlapped by all the time frames, right, that to me is very just an important level. Whether that be for longs, right, so ideally we would want to go long here. But in the same way, like if we're going to close under it, right, it's still going to kind of tell me that we're going to want to return lower. So either way, it's really like a strong flip point in my mind. And the fact we have equal lows here now, let's see if we can't get back down into that. How are you confident the 959 fair value gap? 9. I mean, I could be wrong, brother. But as I said, I have just the confidence in it because of really the things I've listed before, right? It's not only a 1 minute, it's multiple time frame fair value gap. We've broken above a higher time frame, 4 hour, that we would then expect to act in as an inversion anyway. Right, we create the volume imbalance paired with it. So now that we're underneath the 1 minute, let's see what happens, right? Because we hadn't got underneath it. But now we just have, I'm actually gonna remove this. We've got underneath it. So now we wanna see, right, is it gonna offer resistance? Which it doesn't. So now we're kind of starting to do what we talk about, which can lead to potential consolidation, right? We're going down, now back up through. Especially if we get back down underneath again. Like personally, right, things I would want to see is if we're going to get underneath it and immediately reject back above it, I would want us to hold at this point. Because now if we start closing underneath again, right, that's just that consolidation signature, potentially. And we'll have to sit through that before it finally releases. But notice, right, we're hitting the 2 minute, so we still have another volume imbalance to fight through. 2 minute here on a 1 minute chart. You see, that's what we're hitting. Closing on perfectly here with this candle. And look at that, close there perfectly with that candle. So as we said, if we're gonna go higher, it really, I mean, I would want to see it be from here now. Or else I think we consolidate for a little bit more until maybe even 10:30. Right, either that or we're going to retrace into the fair value gap. Bearish volume imbalance now. Oof. Notice how we're still holding that candle though. Perfectly. Yeah, I still have it sitting here. See, so we're really doing what we did yesterday now, right? We're creating volume imbalances. Another one, right? This one here. This was one. We just created another one here. So I honestly think right? Let's just thought experiment. If we're going to continue to deliver how we've been delivering, if we're going to have a replay kind of yesterday, it would make sense then to create this consolidation, right? We have a lot of equal lows, sweep those lows, return into a discount before then returning for that buy side. That's kind of what I would expect, right? That's like the forecast in my mind, we'll say, is I would look for a run on stops here with now these equal lows, 1, 2, 3, 4, 5, 6 equal lows, returning into the volume imbalance, fair value gap. Personally, for me, I would want a little deeper retracement too. So, right, we could easily hold from the actual volume imbalance itself. But I said my limit's consequent encroachment. Here. My stop is under this candle swing low. So I'm saying how, right, we fully rebalanced this fair value gap. And really, I'm kind of seeing this as a BPR even. This wick. Right, we come up, we create the wick, we trade off of the wick into new discounts, and now we blast up and through it. So really, we shouldn't have to return right into this, which is why the entry comes on consequent encroachment here, stop underneath. To where if we do cut right through this, right, my bias is just wrong at that point. And as we said, if we're going to close underneath this, more than likely we're going to actually attack that low. So that may be something that we could watch to potentially cut our risk a little bit, to where if we do get tapped in here and we do actually start closing under the fair value gap, I'll probably trim some of the position. Consequent why? This is just an instance preference here. I don't like the risks to reward the volume imbalance offers me. Right, because if I'm using volume imbalance, I feel I would have to go something like this to feel comfortable. Whereas if I use consequent encroachment, right, I'm simply keeping the same stop, but giving myself a better risk to reward. And as I said, this is a case where we might hold the volume imbalance perfectly and not even give me an opportunity. And I'm okay with that. I'll just miss it, and I have no issue missing trades. So back above, if we hold now, I do think we'll actually miss this entry here. But we're still holding. But kind of the same thing, right? So we were saying yesterday, we keep banging into, right? Notice that most of the bodies are closing on the high here, here. Whereas when we're going lower, it's a lot of wicks. Right, simply wicking lower. Another one. Yeah, classic, just like yesterday. And this is really that boring part of trading where we just sit here, not much to do. Too late. Yes, Manny. Like if we were to break and push aggressively higher through this high, right? I wouldn't want this high to be really retraded into. Prior to reaching this, of course. Like if we blast straight up through, hit that buy side, then we can reverse and attack that. But if we were to like push up and through this high, fall short of this, I would still look for these highs to give us some type of support. $15. So be careful here, right? We have not touched this volume imbalance at all, right? Notice we create it, but have not touched it. So this should be pretty telling. If we get above it, right, we should get these highs here. But as I'm saying, right, just because it hasn't been touched, if we do want to use it bearishly, this candle here should hold and we should actually attack a low again. Like for my entry, if I want to get my entry here, that's kind of what I would actually want to happen. Is for us to hold this volume imbalance here initially, run out lows one more time, and then give me the entry. Yep. Pretty much, Mike. Just a better entry, more refined entry. And right, I'm fine doing that because we already had the winner here. So on this one, if I'm going back in, right, I'm going to be a lot more refined, a lot more precise. And if I don't get it, like I said, I'm okay with that. Notice we created another volume imbalance there, but now we have this one. So this is really textbook from yesterday. We're creating a lot of volume imbalances. Let me go to yesterday. You can kind of show. What time was that at? Right here, right? Look at that. I mean, does this not look exactly like what we're doing? Just chopping, a lot of volume imbalances being created. And this is comedy. Like we said yesterday, as soon as we left here, our buy side got hit. Makes sense. All right, so we're underneath bearish volume imbalance. Let's see if that's on the 2 minute. Okay, so we're tapped in here. Okay, so I'm tapped in here. Now we have a few things to be cautious of. For one, the bearish volume imbalance. After hitting my entry, I would prefer that this actually close. So it got left open, but notice that we actually opened with another volume imbalance. When I see that, that kind of offsets this one. We could still actually get up and through. But for me, kind of like I said, if I see us wander underneath this 3/4 level of this fair value gap and close underneath it, I'm actually going to trim some of the position there. Because I do like that we cleared this, right? Because I was kind of setting up a 3 drives. That's what I was hoping would form into my entry. 1, 2, 3rd. So now I'd want to see this fair value gap get pushed up and through, close above, then maybe use it as support. Attack high 1, high 2, and high 3. Get us into buy side. It's kind of what I would like to see here. If this bullish volume imbalance holds and we close back above this volume imbalance here, right? So if this remains open and we close above this one, I'm actually going to go ahead and move my stop right away to this. So basically cutting it already in half. I mean, basically, Chris, that's kind of my idea, right? This won't be an intermediate swing point, but I'm saying if we can close above this, well, now we will have really 2 volume imbalances that should be offering us support. And I'm okay putting the stop here, even though it's not going to be an intermediate swing point. If this become an intermediate swing point, we would need to see one more higher swing low get placed. So, I mean, ideally, right, in a perfect world, say we do end up holding this, maybe come back into this one and then break, I would be fully confident having my stop here, because that should be an intermediate swing point at that point. Right, this here, not a fan of. Right, we're still holding all of these premiums. Yeah, it is, Mike. It's very much micro market structure. 1 minute. That's just because I've spent so much time on the 1 minute. Right, you don't have to do this at all. Like, you could trade, like, to be fair, you could be someone that sits on a 15 and a 5, right? If 15, like, you see a 15-minute fair value gap here, you could enter on that, stop here, right? TP buy side. And just let it rock, right? Be a 15-minute, 5-minute trader. But as I mentioned, just for me, I'm a little impatient, we'll say. So there's nothing wrong with this type of trading. We're at 5 minutes. Just for me, I like to be in and out. Kind of got that gamer mentality. I like things to be happening quick. Right, and that's what I'm saying. Now we have, look at this. So we have 1, 2, 3, 4, 5 equal highs. Another buy side. two more equal highs, another buy side, and two more equal highs. Right, so that's what I'm saying. All of this looks like it's to be lining up for potential longs. Because if we think who's been damaged more here, we'll say, well, people that are really trying to long. Let's say that you're getting in like here, stop here, you're stopped. Right, trying to use this, you're stopped. Say you try to buy this, buy here at this swing point, you get stopped. Right, say, okay, well now this volume bounce is gonna hold, you get stopped. So anyone going long has been punished. Well, say you caught the top up here somehow, you went short, you're still safe. Right, so really the same exact understanding and logic that we used yesterday. I mean, really textbook. And that's why I'm okay trusting this. Right, because if this fails, probabilities were in my favor and it just failed. And I could be perfectly content with that, almost happy in a way, right? Because you need losses, part of the business. So anytime I take a loss, I'm like, hey, that close to my next winner. But right now we're getting sandwiched between the two volume imbalances here. Notice that. What could happen? I mean, let's go back to yesterday just to show. Like this really looks like what was happening yesterday. We were just short of a higher time right buy side pull. And we just consolidated until 1050. We hit that right at 1050. Oh no, 1049. Right, that macro time. So I'm still gonna have to trust and hold really until that. So if this candle can close above the volume imbalance and close above, especially this candle's high. Because right, this one here is what's bothering me. This is the one that's been offering us resistance, right? We haven't been able to get above it. But as I spoke to you about yesterday, what are we trying, right? We're closing on the highs here with the bodies. Whereas anytime we're going lower, we're simply wicking, right? Notice anytime we take a low, it's a wick. Wick. A low here, a wick, right? Whereas when we're going higher, we're smashing into these levels with candle bodies. And that is telling me that it wants to go higher, at least in my mind. That it prefers the upside, but right, once again, same exact thing, right? We keep smashing right into that volume imbalance. And at this point, because we are equal highs, we have a volume imbalance, we have this volume imbalance, my stop is here. Because I would not want to see this low violated, really. So, I mean, really, wait, if my stop's there, nice, okay. So that's basically break even, to be honest. Which of that, okay, I'll throw this one up for you guys. Maybe. Oof. Not a fan of that. But basically my stop's here at break even. Now that the city has been filled up, should we be concerned if it goes below it again? You're saying this one? $10.30. Oh, yeah. Beautiful there. So that's beautiful, actually, right? We kept smashing into it and now we've jumped it. So this to me is telling me that price is almost like, all right, we're done with this bitch. It's tired of being stopped here, so it completely gaps right over it. And we should. 6 equal highs. I'm actually gonna go ahead and just take a partial as we hit this level here, which is the, this is the consequent encroachment of this 15-minute wick. Oh shit, quick. All right, chill out, chill out. Damn, I'm too slow. Bet. That's 5 handles anyway. So we're partialed out. At this point, stops weighing profit, right? We're not trying to deal with anything. I mean, to be honest, I'm actually gonna go stop underneath. Yeah, we'll go here. Oh, volume imbalance, we're going up here even. I'm gonna go here. So now weighing profit or final target gets smashed. Super interesting. College Hue. Hey, this is way better than college, huh? I hated college. So for me, I would want to hold consequent encroachment here. We could wick lower, but I would prefer the volume imbalance remain open and we actually remain above consequent encroachment of that wick. Right, our only kind of issue is, notice on when we jump the gap, right? So we finally jump it, we haven't touched it at all. And that's what I mean when I said price, right, was just tired of hitting this. Obviously that might not be technical, but that's kind of how I think about it. Right, where price kept trying to get above it, how many times? 1, 2, 3, 4, it kept getting stopped. So eventually it was just like, you know what, fuck this. And instead of trying to go through it, it goes right over it. I might actually, nah, it's all right, whatever. We'll let this one rock. Right, I already had a good full pull winner, so we'll partial out here. Stops win profit, so yeah, we'll just let it rock. Either stop or final target. No more partials or anything. You made me look at volume imbalances. I used to need to see their bodies not overlapping. I used to need to see the bodies not... Okay, all right, I used to see the bodies not overlapping. I want to say, I feel like I understand what you're saying, Kraken. But you're saying you needed to see bodies not overlapping. So like this here, how the bodies don't overlap. Okay, but you called it that are based on open. Okay, 1020. Oh wait, you gave me a time bet. 1024. I see. But you're saying I use them even if... Okay. Yeah, so I mean, to me, right, the ones like these, those are just a very high probability volume imbalances in my mind. So the same way that I kind of distinctify and classify like high probability order blocks versus regular order blocks, right? They're all an order block. But in my mind, certain order blocks will have more of a chance to hold price, right? And I kind of treat it the same way with volume imbalances. Where volume imbalances that haven't been touched at all, right, are very important to me. So like this or like this. But we could still use, right, normal ones like this. Or even as you see it. And I think what you're explaining, you're saying how I use them were like, let me find an example. Like this one maybe, like this is a volume imbalance, but it's closed, but we're still seeing it as a volume imbalance technically. But okay, now I get you. We're on the same page. Cool, well yeah, I'm glad that helps you out. Because in my mind, right, although these ones are nice, ones like these almost give just as much of a indication too as well, right? The closed volume imbalances. That's really why I love the volume imbalance. That's probably one of my favorite concepts, to be honest. And I feel like not many people talk about it, which is fine with me. Let it rock. Because we understand it's a gap, but yeah, they can be utilized. They have so many different ways to be utilized that it's nice. All right, bearish point. So once again, right, I mean, textbook like yesterday, we hit a buy side objective. After consolidation, we hit it, we consolidate. Oh, give it to me. You want it. You know what? Let's do this. We're not greedy. Oh, it doesn't matter. They said, I got you, brother. We'll blast through that bitch. Skadoosh. There we go. Another one. And I mean, that was fucking beautiful. Catching the swing low. Yeah, it doesn't get better than that. Swing low caught. 5 handle partial. And I mean, look at that close, fellas. Hello. Random level. This is love price. This is love price action. And yeah, we're gonna run higher. Do I care? Nah, not at all. We can run 100 points. I'll be like, whatever. I'll get the next one. Pain turned to gain. We all eat. Oh, I'm missing questions on that. All right. When do I remove a volume imbalance from your chart? I will always keep it on there, to be honest. If we're trading near it, I'm going to use it. So like this one here, if we get back down into it and we start using it, right, I'm going to drag it all the way out and use it. I mean, same way yesterday, right? The volume imbalance that we used yesterday, what was it? Oh, I deleted all of it. Oh, no, I didn't. Okay. So, I mean, look at this, right? This is the volume imbalance that we were targeting yesterday. And this formed how long ago? I mean, let's see. July 14th. So almost last week. And you see still how precise, right? We use that level here. All right, look at that precision. So it's not a one and done type of thing. And that's what I mean. If price is near it, it's more than likely going to reference it. And especially if I see price already using it. So like as soon as I saw this candle respect it like that, right, I'm already going to use this volume imbalance because price is showing a willingness to want to, right, basically pay attention to it. And I mean, you could see that here with the volume imbalance. Like seeing this volume imbalance be created, obviously hindsight, but I think you could trust, right, since you've kind of seen it live. Like if I saw this, right, we'd be looking for higher prices. We trade into the fair value gap, and then we create the bullish volume imbalance paired with the old one. This here would be perfectly fine for entry for me, right? Understanding we shouldn't get, even if you want to be safe, underneath the fair value gap. Right, seeing something like that would be clean. Back. My comment on top steps back. Oh, what do you mean? See why I don't say that? I got top step now. Shit. So you're saying we could use PD arrays in this measurement to use them as support once we're above that point in the PD array. So you're saying we could use PD arrays and its measurements to use them as support. I want to say, Mr. Mike, yes. So you're telling me we could use. I'm just trying to understand like the full. So you're saying like if we have a premium PD array, i.e. we'll use this 2-minute bearish volume imbalance. Once we're above him, we expect to use him as support. Okay. Yeah, definitely. That's fair to say. Most interesting trade I've been in. Hey, no problem, Mike. Looks like we're hella bullish. Watch this volume imbalance here for higher prices. Just quickly to let you guys know. Okay, so like support resistance line. Yeah, Steve. I think we're still in the same context. Support and resistance line. I mean, in the basic scheme of things, right? This is all support and resistance. It has a bad connotation because it's a lot of like, right? If we say support and resistance, you're automatically thinking retail nonsense. But this really is just, right, these levels is just support levels. Like I'm expecting price to find support here at this consequent encroachment level, right? I'm expecting it to have initial resistance at the volume imbalance. So I'm only using support and resistance, but it's based off true market symmetry, right? Just the way the market moves. It's not based off random retail patterns that don't make sense. All right, let's So let's see where we're at. Are you happy with top steps? I couldn't tell you, brother. I've only been with my Forex funds, right? So like I mentioned, I just got these top step accounts last week. So this is the first actual trading day I've used them. Which is why, yeah, I just wanted to give them a try. Right? I wanted to integrate to TradingView. I've been using MT4 for so long that I'm fine with that, but I just want to see if I can't find something that's good with TradingView. Would you consider a one tick volume imbalance valid? Oh yeah. If there's a gap, I don't care how small the gap is. It's a gap, right? So like how much was this one? 466. So I mean, this one legitimately was one tick, right? But I'm still going to use that because it's an actual gap there. I guess one little tidbit I can give you of when I don't necessarily fully trust in volume imbalances, okay? It's when there is an inefficiency paired with an old level right underneath it. So although this one may hold, I mean, this was a beautiful example of that actually, okay? We were saying that this one may hold, but because we had this fair value gap, this volume imbalance paired with a higher time frame, right, discount, I'm gonna wait for this to be traded into rather than trusting this. So kind of in the same way that we have created this and it could perfectly hold and be valid, but I'm seeing how, I mean, this really looks kind of like this, right? A key level that we pushed up and through while creating a volume or a fair value gap there. So for me, right, this is where we could find support here, but my entry wouldn't be this, or it would be this, sorry. It wouldn't be the volume imbalance. I would wait for the fair value gap. And like this entry, right, if we use the volume imbalance only and continue higher, that's okay. I'm just gonna miss an opportunity like that, right? Because I'm waiting for the, just a higher probability entry in my mind. Gotta go to college now. Ooh, Mike, have a good class, brother. Random question, does anyone use blue light? I use both, Brisket. So I wear glasses all the time, but so the ones I have just have the blue light built into them. Because when I went and got my prescription, they're like, do you look at screens? And I'm like, oh yeah, all the time. So I got the built-in blue light and yellow light, honestly. Just use TradingView for charts and trade debate. Maybe I could do that. But honestly, I'll probably just do what I did here. Just execute on TradingView. I also use AMP with TradingView and it works way better. Oh, okay. Yeah, that is nice to know, actually, Steve. I could look at AMP. I'll just have to deposit my own funds, but that'd be cool. Because I don't think AMP is a prop firm, it's just a broker. Oh, shoot. My bad, Jay. Missed your question. Can you repeat what makes some volume imbalance higher probability? Yeah, so I guess I kind of gave you a tidbit, right? Volume imbalance, but I'm not seeing this as higher probability because we have a higher time frame discount underneath it. Right, another way that I kind of classify ones, high probability volume imbalances in my mind aren't revisited, right? So like this one, when we open, and this candle doesn't even revisit this candle's closure, right? That would be a high probability volume imbalance in my mind. To where, like, say that this candle was to return into this prior to our target being hit, I'm fully confident buying there. Right? The fact that we hit our target kind of nullifies it because we already reached into it, but you kind of get the gist of it. Kind of same thing here, right? The fact that, was it at? So I said we were watching this one because when this candle was created, it didn't even touch this candle's closure. So this is going to be a very sensitive level, and you see how it reacts first. But that's why once we get above it, I'm almost fully confirmed to go long. Because if we're going to be bearish, this would have held. And then obviously adding in, right, the fact that we had 3 drives into our consequent encroachment, discount, fair value gap. So a lot of things lining up. Yeah, in short, right, higher probability volume imbalances aren't revisited when they're created, in my mind. That, or they're created coming off of a discount. So 2 kind of different things. cover 3 times loss of NQ. Yes, sir, Alex. There we go. Yeah, that's plenty, man. Don't worry about the contracts, brother. Right? Kind of as you say, you should only be worried about really the outcome, the process. Because the contracts will go up as you just get more capital. Right? So that shouldn't really be a focus. I see why. Hey, it's true though. Nothing gives you that feeling, that rush. And I can't lie, as much as like, obviously I love where I'm at now. I do miss them early days where I would just get that rush of adrenaline anytime I put a trade on. It's just a very new feeling. Quite literally palms sweating, knees weak, arms so heavy. There was vomit on my sweater already. Some spaghetti. Spaghetti with hot sauce on my spaghetti. SpaghettiOs. Interesting reaction, huh? Let's see what plays out here. He said I'm there. Oh, okay, Jazz, fair enough. I'll have to kindly decline the offer. Like I said, I miss the original adrenaline. I don't miss the fucking terrible trading I used to do. He said, calm down, Stan. I'm weak. Hey, hell yeah, Kraken. That's dope though, right? And that's the beauty of keeping a journal, is you can go back and see just how much you've progressed, right? What you used to think, how you think now. Hey, no problem, Jay. Take care. Yeah, we're pretty much done here, so you won't miss anything. All the action came within these last 2 trades here. And I mean, look how beautiful that is. Right, so our entry, and this is how you kind of have to mesh time frames. Entry on the 1 minute, but the 5 minute holding that volume of bounce. So we love to see that. And this here, like we said, that was just super telling. The fact that we straight up jump right over the volume bounce. And it's no surprise that as soon as that happens, right now, price is free to expand. And there we go. Hey, Jazz, I appreciate that. I'm glad you find it valuable. Different in a good way. I love that. And that was kind of my plan, hopefully. Be different. Offer something unique. Something I feel like I have a very good gift to be able to read price. So if I can share it, might as well. 2 on 3. Okay. Hey, that's fair, Matt. So you trade 3 separate accounts, like separately? How likely do you think it could? Wait, how likely do you think it could have retraced further into the 15-minute? Let's see, 15-minute. How likely do you think it could have retraced further? Wait, which fair value gap, Chris? Or this one maybe? Is that what you're talking about? So if I drag this out, right, so this is an instance where, yeah, this is an inversion, But I'm relying on the higher time frame, right? As I often say, higher time frames have priority. So I'm saying that the fact that we close above the 4 hour with the volume imbalance, right? I'm relying more on the 4 hour, not this 15. So I wanted to see the high of this 4 hour hold as it did, rather than seeing this 15-minute be revisited, if that makes sense. Also, because, right, kind of the same idea I explained, my entry is here. Right, we've already refilled all of this, right? This is kind of that balanced price range. We've gone up, we've came back down, we pushed back up and through it. So really, I don't want us to return any lower than this 1 minute fair value gap, which would mean that this 15-minute I definitely don't want to see be retraded into. Hope that kind of answers your question a little bit, brother. Five handles, he says. I use one for London. Okay. Interesting. All right. That's cool, Matt. And there's another 5 handles, baby. Oh, not yet. Give me my 5. Give me 5 more. And right, you're seeing how we can go about invalidating volume imbalances. Right, you're getting some real sauce today. Jeez. Right, this is how I go about, because as much as I preach volume imbalances, right, you have to understand there's certain times where I'm not using them. And this right here was a good example. Same with this. But see, now I would use it. And that's kind of where, right? Got to be fluid with it. When there's a shit ton of them. That's definitely one of them too, Brisket. If there's a shit ton of them, definitely. But if we have a higher time frame discount, right? Flip it for bearish, for higher time frame premium, obviously. But if we have a higher time frame discount just underneath, that's very obvious. I mean, this just jumps off the chart to me here. And as you see, trade into it beautifully. Entry, 5 handles coming. All right, same thing here. To where, yeah, it's a volume imbalances, but what is the obvious, like if I replay it at the time? It's like, yeah, there was a volume imbalance there. But where was the obvious discount? Sitting here, right, with that volume imbalance, this fair value gap, and the 4 hour BPR. And as you saw where I entered at, right, I actually went and, let me go ahead and, whoa. Let's go like this and this. OTE. Hello. Right, so just another way to confirm your ideas. And you saw me drag it up once. I don't know if anyone picked it up, right? But when I see that this low to high, OTE is perfectly the goddamn. I mean, hello, consequent encroachment is the OTE inside of the 1 minute and 4 hour fair value gap with a 1 minute volume imbalance and a BPR. Oh my goodness. That's almost 100% probability. Oh, did we get 5 yet? Hey, that's 5. That was a paper trade. I should have took that for real. Nah, I'm just kidding. Like I say, I'm content with enough. Bro, you see how we can continue to just stack these, man. And when price finally moves, like these are so obvious and easy. Like this, you know what I mean? I guess I shouldn't say easy for some of that, right? Because obviously some of you may not find it easy. It'll be easy eventually. I don't want to discourage anybody that might be struggling. But as you spend enough time it really just does become obvious. And times when it's not obvious, right, that's when you sit on your hands. And that's why it's nice, because it really is obvious regardless. It's either obvious that you know where it's going to go and you have a clean entry, or it's obvious that you have no idea where it's going to go, which means you just sit on your hands. So there should never be any guesswork. You may need to do a masterclass on volume imbalances. Oh, shit, maybe. I haven't thought about that. Do I even have? I don't have anything in there, do I? About volume imbalances. Wow, I'm fake. Yeah, that's something I could do actually. So if this remains open, yeah, we're bullish as hell. We're gonna keep it running. Oh yeah, I think we're gonna keep running. Cause look, right? So here's a good example. This is technically a volume imbalance. We closed here and we opened here. So we open with a gap. But notice how we completely overtake that gap and even push higher through it. Right, so when I see things like that, especially this here is telling as well. So imagine this is a 1 minute chart, okay? As we often do. Well, from what we've just been discussing with volume imbalances, notice how this candle doesn't even touch this candle's close. Right, we create the volume imbalance, we can't even get back into the close, and now we continue to push. We create a bearish volume imbalance, right? We can't even leave that open, and instead we push. Let me see. What about this? And I mean, even look at this. So within this discount here, we can't even get back to equilibrium. So our price is showing you that it's very willing to run higher because it's not even coming back into any discounts. So when I see that, right, that just leads me to believe in a higher time frame macro sense it wants to keep pushing. Which if that's the case, we got buy side here. I don't use a weekly chart, but we could take a look at a weekly quickly. We've already hit that level. What I'll do is I'll actually drag out the actual consequence. So like that. And then we come back. We got buy side there. Oh shoot. Shit. That. There we go. Okay. So if we're going to continue to run, where I've broken down this weekly wick into 4 quadrants. That's interesting there. Notice that. Notice how this quarter level is perfectly the 830. Weird. But yeah, I think we're going to keep running into here. And then if we get even more animated, obviously buy side way up here. But that's... Damn, that'd be 70 handles. I don't know if we're getting that today. This is reasonable though. We could probably get here. Another 20 or 5 handles. Oh, that's only 17. I was tripping. Not 70. Still though, I think this is realistic. Oh, my bad, fellas, my bad. He said, oh, isn't there a buy side at 4572? 4, 5, 7. I mean, you could see. I don't know. No, I'm not seeing that, to be honest with you, brother. Oh, okay. Then maybe I did cover it. Like I said, I'm not seeing any buy side that I'm targeting. I mean, you could say buy side objectives, right? But it won't be actual buy side. The weekly? Let's see. No, so that one is that a 45.90? Yeah, show me. Do you have it somewhere, or what are you referencing? Oh, what the? Okay, okay. Yeah, because I could do that again so we can see a little better. But yeah, I'm simply taking, I'll actually move the high of it. Because we're already within this weekly wick. So yeah, I just take the consequent encroachment levels. And that gives me there. Yeah, so for me, these are really the only levels I have. As far as upward expansion, we could probably do, like, let's see, where was the 930? Oh yeah, sorry, say it again. Go back to which one? Here we go. This wick here. No problem. Yep, the equilibrium there. And that's actually, right, so if we go to the, where was the consequent encroachment? That's this level here. And right, that's why, not only was it buy side, but once we break above that level, that's why I was expecting it to act as support for us. And right, someone asked the question of, would I expect this to become a BPR? And the answer was yes. Right, and now you see how perfectly that plays out. So right, because we went up and down, up and down, up and down, when we break these highs, they should not be traded underneath if price is bullish. Right, and if I drag out like the wick, we barely got underneath, right? Wicks do damage, that's okay. But no bodies get even close to returning back below this level. So nice to see that kind of talked about beforehand and then played out in real time. That's that shit. Okay, Alex, what's that? Oh, you use the ESU chart though, don't you, Alex? I don't do that. Which you can, I'm nothing wrong with that, I'm just saying that. Like that volume bounce isn't gonna be on my chart because I'm using a continuous contract. Right, you had asked that actually recently. And that's why I stick with these, because it doesn't have all these gaps. Like if I show you, right, the continuous contract compared to, what's the actual contract? ES. Jeez, this one doesn't even show. September. Oh no. Yeah, get me out of there. Get me out of that. Thanks, man. Hey, no problem, Kraken. Glad you enjoy it. Glad you find it useful. That's really the biggest thing. I'm just glad you guys find value in it all. That's kind of what hesitated me from doing it for so long. I'm like, bro, there's so much like just fucking nonsense out there that people charge for that it almost gives it a bad look. Like if you have a paid group, it's a bad look. Let's be honest. Like off rip, if you tell someone that you have a paid group, I feel like it comes with a negative connotation. But I guess I just had to realize that, you know what, whatever. People are going to believe what they believe, right? People are going to do what they want. And as long as I know and right truly believe that I'm providing value, that's really all that matters at the end of the day. What are your thoughts? So I actually I like that decent there. Because I'm seeing how we push up and through, right, old buy side, leave the fair value gap, we find support there, we create a new discount. So I could see us actually, right, if we trade back into the 5, finding support to give us another leg higher. I would really look, this has like at this level potentially. Even from your free YouTube. Hey, cool, Chris. Yeah, I don't know if people actually be watching those YouTube videos, but I guess they do. If you did, I'm sure some people do. The true people that are trying to learn. Everything is harder when the sun goes down. Oh yeah, but what I had wanted to do was. Oh, shoot. Sheesh. So look at that, right? So I'm dropping projections here. I don't use them too often, but when we don't really have like targets to the left, I like to use them. But you see, we've already really met all the deviations. So I'm taking the Judas swing, that original swing, right, created at 9:30. If you project that out in the morning, more than often than not, it's going to give you levels to aim for. If you're on side with the bias, right, of course. So since we were on sides, I mean, look at how beautiful, right? The third standard deviation lines up with the high of the 4 hour and how we perfectly close on that, creating the volume imbalance, right? Even the fourth standard deviation. Notice how we push up and through it, creating the fair value gap and then use it. Right, even now, fifth standard deviation. Yeah, we're getting way up. Let's see if we took the actual, let's go 5 minute. This whole swing here. Oh, wow. So notice that, right? So when I take the higher time frame, I'm taking this as the kind of the full swing, right? Because this is the swing high that started this whole move lower to clear out this low. So this is that swing that I'm projecting. Well, we've hit, right, 2, 3, but notice where the fourth is. The fourth is, I mean, exactly, right, that old weekly buy side pool. So I often say nothing is random. And seeing that honestly leads me to think that price is going to want to gravitate for that weekly high. Right, not today, obviously, but just in a higher time frame sense, I think that our target is this weekly high here. Because you'll often find if we get above 2.5 standard deviations, so let's actually go ahead and... Now we're getting deep. No, we're getting lit today. It'll be a nice stream to review. If we're going to get above, I mean, look at that, fellas, geez. If we get and close above 2.5 standard deviations, more often than not, right, another probability thing, we're going to continue to reach for the third and the fourth standard deviation. And you see right now, I mean, what did we stop at perfectly? Right, so we've just hit that 2.5 standard deviations. We're giving it a little consolidation. So yeah, if I were to see us, especially holding this 5 minute, if we were to hold that push up and through this and close above it, I think we run. I think we keep on running. And I mean, look at that reaction off the 5 minute we just talked about. Love it. But yeah, we'll go ahead and wrap this one up, fellas. 11:20. All of our objectives have been hit. Good day. So yeah, I think it was beneficial. Hopefully you guys found it beneficial as well. If you have any questions, let me know quickly. Give another 1 or 2 minutes. Minute. But yeah, going forward, right, I would continue to watch. Like we say, you don't want to call tops. So if we can hold the 5 minute, we'll look for that buy side. I think if we get underneath, I would say if we get underneath the 5 minute, well, there's a fair value up there. To be honest, I would probably be long until we got underneath this fair value gap. So this would kind of be my flip point here to where we can come all the way down here, still offer us some type of bounce, and I would trust that. Oh, could you confirm how you got your daily bias? Was it just order flow overall? Pretty much, yeah. So like in general, right, we've been saying, I don't want to call tops in this market. Right, we've been trending higher, higher, higher. So already going into this, I'm predisposed to look for longs, right? Higher prices. Oops, sorry, here we go here. Let me clear this up a little bit so you can see a little better. But when we come into the morning, right, so I'll kind of go back to where we were at. Really here, we were kind of here. Right, so as we're coming into the morning here, and I see this price action, as I said, I'm already looking for continued higher prices. And why is that? Well, it's because we've continued to push higher, and any return into a discount, right, fair value gap, trending higher. Any run lower is simply to pick up stops, right? So we're retracing to clear out these stops, return into a discount, right? We're bouncing. So now as I zoom in on like a 15-minute chart, and I see that we have all of this liquidity resting here, and we come out to run it, especially because we held the 4-hour fair value gap, I'm expecting us to hold this as support and continue higher. And that's really stemming from this candle as well. Because you'll notice, right, we had this 4-hour dragged out last week and this week. We get into it once, we get into it twice, but this is the first candle to actually close above it. So closing above it signals to me that we want to actually go up and through it. So as we retrace into the low, right, I'm expecting to find support there. And as you saw, let me kind of go ahead to the 9:30 opening. I'll just do this. Right, so I'm already expecting us to go higher. And I mean, this really played out as we were explaining. I was saying how we have 1, 2, 3 swing lows here that haven't been hit yet. So even if we do want to go higher, we can expect the Judas swing to run it out. So when I see us create the Judas swing, and really, right, the thing that got me 100% fully confident in the longs was seeing us break back above this inversion, back above the 830, and back above this candle, creating this as the breaker. So right, that's where the first entry came, stacked on the breaker again, and then from there, it was just really all bullish the rest of the day. Right, as you see, any retracement to clear out stops is simply to pick up stops, return into a discount here. Same thing here, right? We engineer those stops, we return lower to pick up those stops and return into the discount. We break higher, we engineer stops, we run lower to clear those stops and return into the discount. We run higher. And now, potentially, right, we create stops. Do we run down to pick up those stops, return into a discount and run higher? That's what I would expect. So yeah, a lot to take in, but right, hopefully it made sense. Could rewatch it a few times if we need to. Yeah, going forward, fellas, like I said, I would just look for continued higher prices. I'm holding that bias until shown otherwise. We'll be back here tomorrow at, give me a sec to look at some news. High impact news 6:30. So same exact plan tomorrow. Right, we'll get here for equities open again and hang out for the morning. And then Thursday, we'll be here at 10 o'clock Eastern for the high impact news on Thursday. But yeah, we'll start with tomorrow. So I'll see you guys tomorrow morning, 9:30 for equities opening. Until then, have a good day. And yeah, we'll talk tomorrow, guys. See you guys.